The world we live in today is an exploitative control system, and it's a mirror reflection of the world we give our energy to, which has theft at the base layer. So of course it would look like that. Of course the people at the top, the greater and greater control structure, wouldn't have to provide value to you because they would be sucking the value from you. Because all humans providing value is faster deflation, faster abundance. So you could say one system has to be like this. It has to get worse and worse. And we're measuring that system, thinking that that's how governments should look. It didn't look like that in the early US.
We're living inside a system designed to bleed us dry, and it's meant to get even worse over time. That's the message from Jeff Booth, entrepreneur, author, and founder of BuildDirect. We live in a world that feels increasingly unfair. Most people work harder, pay more, and end up with less, while a small group at the top continues to gain more control and more wealth without needing to contribute in the same way. That's not a glitch in the system, that is the system. Jeff Booth points out that the current setup gets worse over time because it's rooted in taking, not giving. In a healthier world, progress would make life easier. Technology would lower costs, and innovation would bring more access, not less. But our institutions don't allow that. Instead, they slow things down, hold value hostage, and quietly take more than they give. Make sure to stick around until the end of the video, as Jeff Booth breaks down how this system sustains itself and what it will take to finally break free. Also guys, if you want to stay ahead in the crypto world, I send out a free 5-minute daily newsletter covering expert predictions, on-chain data breakdowns, and breaking news. Click the first link in the description, enter your email, and join about 50,000 others in becoming a smarter crypto investor today. Now, here's Jeff Booth with his unfiltered take on the financial system.
It didn't look like that in the early US. The government was way smaller, more free markets, more powerful markets. What created the US was the move from control structures of Europe to open and free markets where there were more ideas shot, more pucks shot on net, more ideas from entrepreneurs that people took advantage of because they could build their freedom and life in the US. That is what created the US empire that then got captured. And that's what creates all more freedom to humans, faster output because of more ideas, faster abundance. And then those systems always get controlled. So we're measuring today exactly what you said, like this is normal. It's completely not normal in a free market. Normal in a free market is the government gets way smaller. It has to. Because the free market imposes a discipline, and the government has to be in service of you rather than prey on you. And so that state change is so massive. And we're measuring, and so it's interesting, and if you pick up on what you're saying and what this is, because this is a whole bunch of people in Bitcoin, where you opened the conversation, are scared of going to Bitcoin because of the same big government that they're feeding with all of their energy. It's crazy. It's crazy. They're essentially screaming from a jail cell. Right. You better not save yourself because the big guy that we make stronger is going to stop you. The system is a credit-based system. So a credit-based system can't allow deflation because the deflation that deflationary spiral would collapse the credit-based system. So when people think about credit today, I think they conflate those two things. So if the system is a credit-based system, then everything has to be credit. It has to be more and more credit, and you have to increase the amount of credit or debt, or the whole thing collapses. And that's where we are in the system problem today. So then individually, and how would that system operate? So how would the existing system operate? It would mean that inflation is wage deflation, so your wages are going down. But the other side of that is if you had debt, it's also going down because the inflation makes the debt cheaper over time. And that has to, so taking massive bets, loans against that, that's why houses have created so much value, because they've become, not value, instead of being a utility value, they're a hold, they've become a money, and you have to hold your wealth and money, because you can't hold your money and money, your wealth and money. So you take on more debt. And if you have massive amounts of debt, if you're the backbone of the system, and the government will always press a button to be able to make you resolve your problem, like in JP Morgan or any bank, any financial institution that's it. Then if you create this massive backed on the system, and you own all of these assets, and they'll always press a button to inject more liquidity, you extract everything from everybody else. So that's what that system looks like. And then what you're talking about here is, in the other system, deflation is natural, because the natural state of the free market is deflation. And as more people enter that, as we do more with AI, as we do more with robotics, you'll have faster and faster deflation. That means any debt, if you're using the mental model you used to use, that debt will get cheaper over time because of inflation. In the new model, that debt will get more expensive over time. And somebody is going to pay, right? If you lent it out, your Bitcoin, and they couldn't pay, right? You're going to have to either take their business, take their assets, take their, and so many people are going to get confused by this, because it's a really complicated topic, measuring that system change from the system you're measuring from, because it's exactly opposite. Credit cannot look like it does in the new system. The way it does, it eviscerates most of the credit. I'm not saying credit isn't here; it's just way smaller, because as a user of credit, you have to decide, can I pay this back in something where prices are falling faster and faster and faster, making that debt more expensive. Now, if you're there's all sorts of tricks, and MicroStrategy is one of them, and I think they're going to do a good job of using the existing system as an attack against the new. But be very careful if you're levering your Bitcoin. Be very, very, or if you're trusting somebody else to lever your Bitcoin, be very, very careful, because this is going to wreck a lot of people.
America was once a place where freedom sparked innovation, ideas flourished, and people built things that changed the world. But somewhere along the way, that spirit was hijacked. Today's system runs on debt, and everything is built to keep the illusion alive. In this system, saving is punished, and reckless borrowing is rewarded. Fortunately, Bitcoin offers a way out. It rewards patience, discipline, and long-term thinking. It takes power away from middlemen and puts it back into the hands of regular people. Now we're left with a choice. Keep feeding a system that only benefits the top, or start breaking free. Bitcoin has delivered annual returns that outperform stocks and real estate, without relying on anyone else to keep their promises. However, Jeff Booth reminds us that it only works if we use it. Tools like Lightning, Fedimint, and Breeze make it possible to spend Bitcoin and strengthen the network at the same time. Saving alone won't actually save the future. Every transaction helps weaken the old system and reinforce the new one.
So you have a 45% IRR for the last 15 years. And non-counterparty risk. So holding in self-custody. If you just hold for any length of time, you have a 45% IRR. If you're buying a house, you have maybe in 6 or 8%. If you're any other, so you cannot get a compounded. The only thing in the world that is that rate of return is Bitcoin, and it's non-counterparty risk. It has zero counterparty risk to the existing system. And so, what are people doing? Which seems crazy. I'm trying to increase my IRR from 45% to take risk inside the other system that has all of the risk. So how you're thinking about it as savings technology is, I think, the best thing you could teach. It's the risk-free rate of the world today is 45%. If I don't think I can beat that, right, I wouldn't invest. In fact, we use this calculation at EgoDev. Because the only way I think I can beat that is either what MicroStrategy is doing, lever this and play that game through shorts, longs, and hedge out my risk, or build companies that provide value in the free market and accumulate Bitcoin on their balance sheet by doing so. And then you're having essentially venture returns on top of a venture asset. So if Bitcoin isn't a medium of exchange, it will fail as a store of value. So if you are not using as a medium of exchange, then you're relying on somebody else or a lot of other people to use it as a store of value to be able to protect your wealth. And again, it comes back to you. What are you making the decision? Maybe you get away with it because a whole bunch of people already made the same call that you are, Robin, that I am, and using it as a medium of exchange. Maybe you get away with it, and that's just okay. But you have to understand, because the systems are different, right? We've never lived in a global free market where you could trade with people all over without an intermediary, right? And the output of that trade was deflation. And think about why that output of that trade has to be deflation. You are part of the network. I'm not saying Bitcoin here, I'm saying you're part of any trade, you're part of the fabric, and you only choose things that give you more value. And all entrepreneurs have to compete with and provide more value. And they have to compete with what was there before. Otherwise, you won't use them. So that global trade has to be deflation. So you're a node in that. Now, if you take your power and you give your power away to somebody else and say, I'm just this network, and this other one is inflationary, and it stops that from happening, then that system has to stop Bitcoin at some point. And if all of your trade is in that system, and you are not self-custodying, not running an economic node, and all of these trade, then that system will stop Bitcoin in time. Because not enough trade, not enough. So the little tiny fees from Lightning and such that then move down to the miners. What if all of those fees are in the centralized system? What will the miners choose? So you are an active participant in this. So when people, the simplest thing you could just repeat, if Bitcoin fails as a medium of exchange, it fails as a store of value, period. It will be captured. Say it over and over and over again for anybody who's not listening. And eventually, hopefully, enough people will get it. And why, just like in Bitcoin running a node, they should contribute, or they ought to contribute to the network that's also providing them their store of value. If you look at all of these technologies that allow more payments in a way that doesn't centralize, now, people really need to understand the tech to understand how it doesn't centralize, but if it uses Breeze open source and how the routing nodes are done and how it uses Lightning or Liquid or eventually Arc, it becomes a layer that you can just plug in and optimize your business for payments. And by doing that, you contribute to the nodes you contribute to the network that's decentralizing.
In other news, Spar, one of the world's most recognizable retail franchises, has officially started accepting Bitcoin payments at a supermarket in Zug, Switzerland. With just a quick scan of a QR code, Bitcoin payments now happen in seconds. But what might seem like a simple tech upgrade is actually much more. It's another real-world confirmation of the future Jeff Booth has been describing for years. Booth has long argued that Bitcoin's value isn't just in holding it, but in using it. When daily purchases start happening over the Lightning Network, Bitcoin's role begins to shift from speculative asset to functional money. That shift matters because, as Booth points out, inflationary currencies keep people trapped in systems designed to extract. Bitcoin, by contrast, rewards saving, reduces reliance on debt, and moves financial power back to individuals. Spar's step into crypto puts it among more than 1,000 businesses in Switzerland already embracing Bitcoin, in a country quickly becoming Europe's most crypto-forward jurisdiction. And if enough people use it, this rollout may soon spread far beyond Zug. Remember, if you want guidance through cryptocurrency's exciting but sometimes unpredictable world, our daily 5-minute crypto newsletter is here to help. Don't pass up the chance to stay updated and make informed choices in the crypto market. The link is in the description below. Anyway, guys, I hope you all enjoyed today's video and that it gave you some value. I'll see you all in the next one, and as always, all the best.